What's up, guys? In this video, we're going to be talking about Overstock and the recent share price disaster. It was almost at $40 a share back in August, and it's fell 50% since August. Not only this, in a single day, it dropped 25%, and I'm going to be breaking down exactly why this is the case. They've recently released a PR announcement, and I'm going to be breaking down why I believe this is not the end of the world. At $18 a share, which is where it's currently trading at, I think you guys may have a fantastic opportunity. And I'm going to be breaking down if I'm buying or selling this stock, and also other factors such as the housing market and also mortgage rates. Okay, so let's first talk about the PR announcement of Bed Bath & Beyond and Overstock. Well, if you didn't know, that Overstock recently bought Bed Bath & Beyond for $21.5 million, and they bought the IP of Bed Bath & Beyond, which includes the trademark, the customer list, the websites, and then also the actual name of Bed Bath & Beyond. And since around June 28th, this is when they started to roll out this new change, and they released the Canada website in June 28th. So this was supposed to be an update of what this Bed Bath & Beyond acquisition and how it was performing. And Jonathan Johnson updated us, showing that on the 1st of August, consumers are showing that they love the new Bed Bath & Beyond name, said Jonathan Johnson. And he said, even in a challenging macroeconomic environment, we've acquired new customers and then reactivated past customers. So they're making performance and inroads into that customer list, which is great news as an Overstock shareholder. It shows that we're taking market share and actually improving on the customer list and making sure that everything is looking good. Now, not only this, the top line performance has been improving steadily, and we are experiencing year over year order growth in the US, and then leading to new customer orders as well. So this is again great news. We're making great acquisitions of the customer list, and it's showing that the current and initial implementation of Bed Bath & Beyond is working from a consumer standpoint. So over Labor Day as well, we've also seen that the first major holiday under the new brand was successful in the new categories such as bedding, bath, and kitchen categories, which is something that Overstock didn't previously have. They previously had things like sofas and other factors, which was kind of liquidating other kind of sofas, beds, anything like that. However, we have a new category which offers a very different kind of revenue source through the new bedding, bath, and then those kitchen categories. And they vary in order value, which is going to be another metric that we're going to be talking about later in this video. So not only this, we've seen strong year over year growth in aggregate for the comparable period. And he then goes on to thank his team in US and Canada. And he says that he still remains optimistic about the future. And he's basically saying that the business is in a better place. So we look further down now, we're going to take a look at the revenue metrics. And this is where it could potentially get more ugly, and another reason why this sell-off actually occurred in Overstock, and which led to a 25% decline in a single day. So firstly, it was the active customers, over 4.8 million as of September 4th, 2023. And this led to mid-single digit percentage net increase in customers since the US launch. So first, tick. This is good. We're obviously seeing increase in customers, making use of that customer list, as I mentioned. And we've been doing that since the US launch. And this is already a positive change, which the business didn't have before. Now, again, if we look at the orders, mid-single digit percentage growth year over year includes high teen percentage growth year over year since the US launch. So another tick, showing the business is in a much better place. So then if we look at the third, now this is where it gets much more interesting. Now we're looking at the actual revenue itself. They said that mid-teen percentage decline year over year includes low double-digit percentage decline year over year since the US launch. Now, this is where it gets very, very convoluted, in my personal opinion, because why they decided to use year over year is a very strange metric. Since then, obviously, the housing market was in a very different place. Inflation was in a very different place. And also, we didn't have the acquisition last year. And it's only been a month since the actual acquisition itself. To add, August is actually a very poor month in terms of the cyclical nature of the retail industry. So why they decided to use this metric is very odd, in my opinion, first and foremost. They should have decided to go either sequentially, month over month, or they should have done quarter over quarter. I think this would have helped actually understand a better performance of the Bed Bath & Beyond acquisition itself. Using a year over year number when we only have earnings coming out in kind of the next month is very odd to me. And someone should have probably vetted this particular PR and decided whether or not year over year was always going to be the right or wrong decision. And in my opinion, it was definitely the wrong decision. Now, the next thing is the average order value. High teen percentage decline year over year includes low 20% decline year over year since the US launch. Now, why they decided to even include this is just beyond me without any kind of further note explaining why the order value is down. Now, they did mention in the actual previous release of Bed Bath & Beyond that the order release was going to be down because they have different SKUs offering at different values. So if we consider things like bedding and bath and kitchens, these are definitely very different in terms of the revenue that they're going to produce compared to a sofa. I believe the average order value for Overstock was around the $230 mark. And when you consider something like bedding, well, bedding is going to be nowhere near $230. So obviously, we're going to have a decline in the average order value. For them to not have a note just seems actually bizarre to me. And it's something that just didn't need to be included, in my personal opinion, without explaining exactly why they're going to be declining year over year in terms of the average order value. Now, the next thing, which is even worse, in my opinion, is the expense metrics. Now, firstly, is the gross profit. And I think this is the main reason the stock sold off. I think initially they thought that, okay, Overstock is sacrificing revenue for margin. Well, this is actually not the case at all. Overstock announced that they were actually going to be highly promotional to gain new active customers in the first kind of few months, which is expected. We're expecting revenue to increase and then to sacrifice gross margin through promotional events. So not only was gross margin down from 23% to 18%, sales and marketing increased to 15% of the total revenue. And this probably put a big red flag for Wall Street, as they probably thought that it was going to be much better than these current numbers. However, one thing they have completely overlooked is that this is temporary, and Overstock told us that this was going to be the case, which is why it just feels so annoying. They should have actually provided more of a statement, understanding why the gross profit was going to be down and exactly why sales and marketing was going to be up. Obviously, they're acquiring new customers, which will provide some decline in gross profit. But as it's temporary, this, in my opinion, has been so overblown and it's so frustrating from an Overstock shareholder perspective. So if we digest a little bit of the PR announcement, particularly the comparisons year over year, first thing to look at is home sales. Now, in 2022, home sales were at 5.8 million. Well, since 2023, this is already at 5.1 million, showing that the decline is already massive, which is not great to see. And why they decide to use year over year is so frustrating to me. If they'd used quarter over quarter, it would have been a better representation of where they're currently at and how the acquisition is actually working. Because when we use year over year, there are so many other external factors which can impact revenue. So to report revenue over year just makes zero sense. So why has housing been so bad? Well, it's obviously been down to interest rates increasing. Back in 2022, this was at 3%, which is what the average US person is actually living on in terms of their mortgage rate. Since then, it's obviously back up to 7.18% as of September the 14th, 2023. And this is for a 30-year mortgage. So this explains why we're actually seeing a decline in housing sales, because the cost is so much greater than it was last year. And this impacts the acquisition of Bed Bath & Beyond and Overstock. And so reporting numbers year over year is very, very tough when you have interest rates at 3% compared to 7% in the current year. It makes zero sense why they decide to do this. And this has certainly impacted on the performance of the share price on the day that they release a PR announcement. However, the good news is that we could potentially see interest rates top out in kind of the next few months to maybe even a year maximum. I think if we start to see this roll over, then we can see performance in Overstock share price. If we start seeing mortgage rates actually decline, that should hopefully help with housing sales as people want to pick up houses at a lower value. Not only this, we need to consider wage growth as well. In last year, we saw wage growth of around 6%. If we are able to get anywhere near wage growth of maybe 3, 4, 5%, then this actually offsets a lot of the interest rate improvement. So we need to see this kind of improve over time and monitor exactly how mortgage rates are going to perform over the next few months. But I do think we are getting very close to this topping out now. And I think this will help Overstock's price performance. So, should you be buying this company? Well, at $18 a share, down another 3% today, which obviously isn't great, you get a lot for your money, in my opinion, with this company. Particularly, we can see that the enterprise value is at 554 million, which is what you're buying this business at. Due to them having net cash of over $300 million, their market cap is 846 million, but the enterprise value is 554 million. So you already have about $7 a share just in cash. And this doesn't even include other companies such as a Medici Ventures portfolio. So if we take a look at the financials here, we can see on their balance sheet, they have long-term investments here. And this is currently valued at 208 million. And this is that Medici Ventures portfolio. And at 209 million, I think this is extremely low for some of the businesses we have inside. If we include Grain Chain, Bits, T0, we own big percentages of these companies, which could turn out to be billion-dollar business potentially, especially companies like T0 and Grain Chain, in my opinion. And I have other videos breaking down exactly what these companies do and exactly why there's such a big opportunity, which you can check up in the corner above. So in summary of Bed Bath & Beyond, the acquisition, how it's performing, and the PR nightmare, I can safely say that the business is actually in a better position than it was a few months ago. The acquisition is going to pay off. We just need to see execution from Jonathan Johnson and the team, and I definitely think they can take this business and deliver exactly what we want as shareholders. It will take more time though, and I think people need to be patient with this acquisition because it will work out. And not only this, we still have cool options in companies like Grain Chain, Bit, T0, and we just need to be patient and let things play out for the time. Not only this, I would like to see insiders buying. I'd like to see Jonathan Johnson and other high individuals in the business buy some shares up, showing that they got belief in this business. I would also like to see buybacks by Jonathan Johnson at $18 a share, 550 million market cap. To not buy shares just seems criminal right now. So I think over time, we will start to see real execution in the business. Obviously, the PR was a nightmare. However, we have to do what we have to do. Not only this, we'll see hopefully mortgage rates top out in the next few months to maybe a year maximum, which could help as a tailwind for Overstock. So as a shareholder, it's time to be optimistic still. Obviously, it's not what we want to see in terms of the share price performance as of late, and the PR wasn't the bestly executed thing I've ever seen. But is it the end of the world? No, I don't think it is. I think you guys have a massive opportunity. And since it's already been at $40 a share since the acquisition, what happens when numbers start to improve? What happens when gross margin gets back on track? What happens when we suddenly see Wayfair struggling to make profit and their revenue decline because Overstock are gaining market share? These are real things to consider, and I certainly think that the opportunity is very strong still. Now, if you guys enjoyed this video, make sure to drop a like, subscribe if you haven't already, and let me know your thoughts in the comments. I'd love to get your thoughts and opinions on Overstock, the recent disaster with the PR, and if you're a shareholder or if you're buying or selling the stock. Not only this, if you enjoy further stocks like this, I did a breakdown of Hims and Hers, which you can check up in the corner, which I think you guys would very much enjoy. So I'll see you guys in the next one.